Finally, some good news here in Canada. The unemployment rate dropped to 6.6%. The peak was 6.9% back in November, and since then we are seeing a downward trend. The unemployment is right now it's 6.6. So good news for Canadians that the economy seems to be recovering, right? But let's take a look into the data. So we saw the job numbers published. We saw an uptick in the jobs creation in the month of January, particularly in the private sector. If you have been watching my channel, you know that I have been pointing out to you that the previous year job creation has been in the public sector, in the government sector, which was not healthy for the economy. Now, for the first time in the months, we're seeing the job creation is increasing in the private sector, especially in the manufacturing sector, which is a good sign, a healthy sign in the economy. Maybe we have hit the bottom and now the economy is recovering. Who knows? This is what it looks like at the surface level, okay? Now, the threat from the tariffs are still there, okay? It has been suspended for the 30 days, but it may come back. If it is imposed upon us, we're going to have massive repercussions on the job market, especially in the private sector, because 40% of the total manufacturing jobs in Canada are associated with the Canadian exports into the US. 40%. And 70% of all the automotive jobs in Canada are associated with the products that Canada exports into the US. So we have a lot of reliance in the manufacturing and auto sector. If the tariffs are imposed, those jobs are going to get impacted and we could see the unemployment goes up again. So I hope these threats from the tariffs are only for negotiation tactics. It's not really going to be impacted, I hope. But if it happens, then we're going to see a major uptick in the unemployment data. So let's take a look on another perspective. So I always try to see the narrative from the other side as well. For example, in the US, we have Zero Hedge, which is always a parallel media, always trying to bring another perspective against the mainstream government narrative. Similarly, in Canada, we have a mini Zero Hedge. It's called Better Doing. Okay, they always try to come with an alternative view of what the mainstream media or the government is telling you. But jokes aside, the guys at the Better Dueling are doing a fantastic job giving another perspective for you to consider before you make your conclusion about what's happening in Canadian economy. So I was reading this article from Stephen Punwasi, and he has done an amazing job diving deep into the numbers, how the Stats Canada capture these details and how it is presented to us. And what does it mean by these seasonally adjusted data? Okay, so in simple words, basically, when you hear about seasonally adjusted, that means the data has some noise removed from it. What do you mean by that? So basically, when it comes to spending, okay, the spending is seasonal, which means the stuff you buy in the winter, you don't buy in summer. Okay, similarly, the big ticket items that you buy, buying a house, buying a car, you don't repeat them on every year. Okay, that's called seasonality. So whenever you collect the data for the spending or unemployment, you then adjust the number based upon the seasonality. But by doing that, you actually remove a lot of stuff from it to make the number look good. Are you feeling lost in the complexity of global economy and trying to understand how this is going to impact your investment portfolio? You are not alone, my friend. I have been through and I have learned the hard way, and I'm trying to converge all of my experience and learnings into a course that I just designed specifically for you. In this course, Mastering Macroeconomic Fundamentals for Investment Strategies, I'll show you how to decode the economic trends, navigate market cycles, and build smarter, adaptable investment strategies. You're going to learn, analyze key indicators like GDP, inflation, and yield curves, identify opportunities in commodities and crypto alike, and adjust your portfolio to thrive in any cycle. With real-world examples and actionable insight, this course will empower you to invest with confidence, no matter what the market is. Don't just react to the news. Understand them. Enroll now and take control of your financial future today. This has been a regular practice in the mainstream economics, but it is changing in the world of finance. Why? Because the trade and the economy today is not that predictive as it used to be 100 years ago. For example, we have major events that has massive impact across the global economy, like pandemic, like wars, like terrorist attacks. those events are not predictable and they have massive repercussions not only on the region where it happens, but it can have a major impact across the global economy. So the point is, you cannot predict these events and they have major impact on the economy. When you adjust the data for the seasonality, you remove a lot of stuff from it to make the number look good, but it doesn't necessarily reflect the reality. That's what Steven's point is in this article. But for an average person, for a common person, it doesn't really give you actionable insight. Okay, so when I read through the article and then I saw this chart and I realized, okay, Steven, I got your point. You're making a very valid point here. When we look at the trend, comparing both charts on top of each other, like adjusted number versus the unadjusted number, we see similar trend. It's not exactly same, but it is similar trend. We have seen an uptick from January 2023 onwards, and now we are seeing perhaps it is reaching plateau. Okay, I understand that it has spikes up and down, but from a long-term trend perspective, it looks pretty similar to me. But I get your point. Okay, so what is the lesson for us in this video? Well, it looks like the economy is about to heal. Okay, we have hit the bottom. The unemployment has peaked in November. Maybe now it is plateauing, and now from here it may come down, provided there is no major event happened. For example, this threat from tariff is still there. It is delayed for 30 days. If it comes back, it's going to have a massive impact on the private sector job creation, which can push up the unemployment back to 6.9 and then maybe above 7. That's what RPC's prediction was last year, by the way. So assuming if that doesn't happen and there is no other major event happen like global recession, Canadian economy might be hitting the bottom, and now from here it may move sideways for a year or so, and from then it may come back. There is no certainties, only probabilities. And we also saw the fresh data about the real estate transaction across Canada. The market is a very strong seller market. Okay, we have seen a major bump in the number of inventory levels, and we're also seeing a reduction in the transactions, especially in the areas like Toronto and Calgary. Montreal has been an outlier for whatever reason, but it has been a seller market and it will remain a seller market for quite some time. If you can take advantage of it. Every crisis has an opportunity for you. It's your job to find the opportunity from all of these crises. Anyway, you let me know what you think about that. Put your comments down below. If you like this video, give me a thumbs up, subscribe, and I'll see you in my next video. Take care. When it comes to investing, staying informed is everything. That's why I've been diving into Momo. It's got some tools that are pretty useful for navigating today's market. For example, Momo gives you free access to real-time level 2 market data, advanced charting tools, and professional grade research. The kind of stuff that you usually pay extra for on another platforms like Questrade. And let's not forget the low FX fees. If you are trading in the US stocks, like myself, I don't trade TSX. Those savings can really add up over time. Pair that with the insight that you're getting, it's a game changer for making informed decisions. Plus, while you're waiting for the right market moves, your idle cash earns a solid 6% annual return through their Cash Plus feature. That's a nice bonus. So whether you're trading actively or just keeping an eye on the market trends, Momo is definitely worth a closer look. So you can start investing today by clicking on my referral link, which will give you $50 free credit to start with. Thank you, Momo, for sponsoring this video. Nothing from this content should be deemed as a financial advice. Please consider all the risks associated with the investing. Terms and conditions apply. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and it allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.